We live in very interesting times. We also live in a very interesting region. The changes over the past 5-6 years have been remarkable. If you live in our part of the world, which many of you do, you'll see that we started with a global financial crisis in 2008 that took us 2 to 3 years to get out of. If you live more closely in the Middle East region, then you know that we went through a geopolitical storm that we're still kind of working ourselves out of. How we come out of it is still uncertain. Some have positive hopes, some are still worried, but it's still a very turbulent times. So, you know, it all reminds me personally of the famous book, Who Moved My Cheese? All of a sudden, the environment changes and you need to roll with the punches. You need to change your business model, you need to change the way you do business, you need to change your policies, you need to change your outlook in order to be able to survive. If you keep doing what you've been doing, you will ultimately fail. I work for a private equity company, what used to be a private equity company called Citadel Capital, and we started off by looking at projects around Middle East, North Africa, and East Africa. We raised funds from the Gulf and from Europe, so these were incremental fund flows that would come into Egypt predominantly. We would use this money and invest in Egypt and East Africa. We would go to the banking sector in each of these markets individually where we're holding projects and raise money at the local level. So we were consumers of capital on the private equity side, on the banking side, on the DFI side, and we were doing very well and we were very happy. And then the environment changed. All of a sudden, with the global financial crisis, there's no debt availability. Equity investors are no longer willing to do fund flows to these regions who have been experiencing very good growth rates because simply they are facing issues in their home markets. Right, growth rates are becoming very difficult. Everybody wants to protect their home market first before being able to go out and invest in other countries. So things have become fairly difficult. We changed our business model. We said, you know, we can't look at temporary capital. We can't look at capital that's coming in for a specific project, 3 to 5 to 7 years, then they need to exit. We need to look for permanent capital. And we changed the business model. So we listed our company in Egypt. We started raising permanent financing for permanent projects. Projects were taking longer to complete. Getting debt was becoming much more challenging. Banks started to see risk differently. So instead of a 3 to 6 month approval process for a single project, it became 6 to 12 months. If you have any political issue arising, the banks would sort of freeze, reassess, and then move on. This takes time. If you are building a greenfield project, if you are doing any sort of project that requires permanent capital coming in, any one of these breaks really hinders the project, even sets it back and makes it closer to failure than a success. So when we hear things like SME financing, it's great, but if you can't finance large corporates, let alone medium enterprises, let alone small enterprises, let alone microloans, I think the lowest hanging fruit starts from the top and then it goes down. I'm not saying don't develop all the systems, but what do you focus more on? So that was our view of the world. So moving on, we said, great, you know, we've changed our model. How do policies matter to us? And we are the ultimate consumers of policies, macroeconomic policies, monetary policies. Today there's a renewed interest in the region. Investors are coming in drones. We haven't seen that before in the last 4 or 5 years. Over the past 2-3 months, all the investors are looking back at the region, especially the areas that have seen more stability than others. So more specifically, I've been spending a lot more of my time talking to investors who want to come into Egypt and East Africa. They see it as more of a safe haven, relative safe haven compared to the other countries in the region. They're looking at attractive growth rates, and people are excited to talk again. However, they have some concerns. These concerns I cannot address. These are monetary aspect concerns and macroeconomic policy concerns. These concerns are as follows. FX, the foreign exchange risk. Are you going to devalue the currency? Is it going to be a managed devaluation? 2, are you going to change your policy on energy, which is very important and reflects on your balance of payment. It also reflects on your foreign exchange policies again. 3, repatriation of currency. You've allowed repatriation, there were some hiccups, will these continue, will these not continue? These are questions that at the end of the day, the answers to these questions dictate whether we have fund flows, the ability to fund businesses and do new businesses, or we have to wait until the tides have changed and the policies have become more stable and the investors have become more confident. That's on the investor side. On the banking side, people have limits, legal lending limits, a single obligor limit. There are many things that tie down the ability to do funding for new projects. So how did they deal with it? We learned that we have to go to the DFIs, the Development Finance Agencies. These are great institutions that potentially take longer to get there on any given project. However, they keep moving. They never stop moving. Again, you need to answer some major questions. Foreign exchange policies, repatriation policies, and so on and so forth. We are the ultimate consumers of these policies. We don't control these policies, but they impact our business the most. Well, that is very important. I think there's another challenge also ahead of the private sector. The challenge is the ability of the governments to execute projects. And I'm not talking about the willingness. I think there's a big disconnect in our part of the world between the willingness on one end and the ability on another end. Governments and ministers at the high level understand the need for projects, for development projects, for new investments, for developing greenfield investments, for creating employment opportunities, for the private sector to be vibrant and to lead the economy. However, translating that into a reality, getting projects done, being able to execute projects, is very challenging for now. I think this will remain the challenge over the coming few years. If we're able to solve that challenge, if we're able to answer some macroeconomic policy questions that investors have, if we're able to get more competition in the banking sector, I think the private sector will do extremely well. Just a final comment on SMEs. One of our most vibrant businesses is a microfinance business. And this is a company that we had to get in commercial banks to come alongside our equity to be able to be under their umbrella, the regulatory umbrella framework. And all of a sudden, a regulation changed, and now we're able to extend loans to more people, and this business is doing extremely well. This is an example of building a platform or building a company without the regulatory framework being properly there, and sort of working around it, as if you're taking a shortcut solution to get it going. But once the regulatory framework is there, then really this business takes off. And it creates the most jobs, right? We've all learned in economics, focus on your SMEs, focus on your microfinance loans. These are the ones that have the highest return. They do, but they don't do alone. They need the policies that go with them. I think I'll stop.